Well, another day, another rally, and the Dow Jones Industrial Average hits another all-time high. In 2025, we said that about the S&P 500 52 times. It was a year of climbing, and it looks like that climb is continuing. Good gains across the board. S&P 500 up 0.5%. NASDAQ bouncing back up 1%. The high beta market of the Asia-Pacific region, Hong Kong, up 1.7% yesterday. And in a little bit of outperformance from the Australian market, up 1.85%. It's green lights all round and green on the screens, and lots of buying momentum as we start the trading day here in the Asia-Pacific region. Some very good gainers yesterday. Web travel was up 19%. Now, its shares have been under significant pressure, dropping by almost 2/3, but the big bounce back yesterday might be an indication that that relentless falling is coming to an end. Oracle reversed the previous weakness, down 12% last week. Last night in trading, Oracle shares rose by 10%. Erasing most of last week's losses. And Palantir under pressure despite a very strong result last week. Its shares also bounced back in trading last night, up by 5%. We also saw good support for other asset classes. Gold up 2% and back over the $5,000 an ounce mark. We saw Bitcoin bounce back up over 70,000 US, and some sighs of relief, no doubt, from some of the crypto bros on that bounce back. Looking a lot better on the chart. Speaking of the Bitcoin chart, the key support level is around that 74,000 mark. So the positive momentum continues, and it can rise above that level, at least from a technical point of view. Bitcoin will look a lot more solid. Now, it wasn't gains all round, though. Gas came under pressure, down 8.5% in trading overnight. So we remain a very specific market, and earnings remain a key driver of results, certainly what we're seeing in the market at the moment. So in the US tonight, we've got reports before market, that is before 1:30 a.m. East Coast time. We'll hear from Coca-Cola, Spotify, and BP. Now, these three will give us a read on the health of the consumer and also on the broader health of the US economy. So important earnings reports tonight. After market, we'll then hear from Ford. So plenty to look out for. And of course, there's hundreds of companies reporting in the US tonight and all along this week. Given the market moves and given the shift in market sentiment recently, the risk-off mood might favour big pharma, despite the fact that it's a lot of changes at the moment. Now, Novo shares are down 23% for the month of February so far. And the concern here is the fall in revenues. Now, a lot of the pharmaceutical companies have done very well out of weight loss drugs, but that's now causing concern. And there is some concern given the mania and the huge demand for these drugs and the rush into production of a lot of competing weight loss drugs. We've seen analysts revise their earnings estimates for some of the early leaders, and Novo was amongst them, because of that increased competition the demands has caused. Novo is looking at a significant cut to its margins because of that competition in the space. And it's affecting everyone. And the big worry in the pharmaceutical sector is this threat of a 15% tariff on all imports. Clearly hard to absorb and hard to grow earnings in that sort of environment. And with doubts now coming into some earnings forecasts because of that increased competition, particularly in the weight loss drug area, we're seeing share prices under pressure all round. Merck down 3.5% in overnight trading. Last week, it told the market it was looking at $66 billion in revenue for the upcoming quarter. That was well below expectations and reflects those concerns about the product. So we're seeing real pressure on the share price in what appears to have been a delayed reaction to those downward revisions of its estimate. But the real issue for the pharmaceuticals is the number of patents that are expiring over the next 12 months or so. It has around $300 billion in sales that will be affected by expiring patents. And so we've seen real concerns around these expiries all the way up to 2030. It is suggested there'll be a lot of mergers and acquisitions in the pharmaceutical space because of this concern about the future of the product. There's also obviously efficiency issues, particularly concerning AI, but other supply chain efficiencies are also possible in this space. So there is a compelling case here for mergers and acquisitions and efficiencies to come from that. It appears now investors having concerns about the mature drug manufacturers are turning towards those manufacturers that are still in the clinical stage, still developing new drugs and have potential to IPO to the market. And I suspect that that will be the case while the largest and established players in pharmaceuticals in the US sort themselves out. AstraZeneca is a good example. And turning to our watch list, it's the first stock on our watch list today. Its shares fell 2.5% in overnight trading. It'll report before the open. It does face patent expiries as well, but it is talk that it's paid $15 billion for a Chinese manufacturer of a weight loss drug, CSPC, and that purchase, if it turns out to be an efficient competitor, might turn out to be a bargain. At the moment, the concern is that too much has been paid for an unproven drug by AstraZeneca. One to watch as it releases its results. Turning locally on our watch list now, Macquarie was up almost 2.5% yesterday following the release of its third quarter result. Now, it's not a full profit reporting. Macquarie is not US listed at the moment. But nonetheless, the boost in its commodities and markets businesses has been very pleasing. Its AUM is reportedly up to 736 billion, up another 3%. And although they didn't put numbers around it, the company said that profit is up. A number of analysts have a buy rating on Macquarie. It's the first of the major banks to report. And on the back of that report, we'd say it was a solid performance for the quarter. We'll look to see how that translates for the big four banks as they also report their results. And last on our watch list today is Car Group, the REA affiliate, News Corp owned online car sales group, up 10% yesterday after its half-year results were unveiled. Revenues up 13%, profit up 12%. We're certainly seeing its audience grow, and it's been growing its dealer trading segment. So with those stronger numbers and guidance too for further growth of a similar ilk, up 12 to 14% for the full year. Analysts have a buy rating on this one, trading at around 32 times, not expensive for an internet business. And Car Group back on the radar.